We're going to do a brief video on MDB Stock news. That's MongoDB. And we'll take a quick look at this. This is a daily chart we've got up here. We have a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. Let's go back just a little bit and see. Back in November of 21, this stock was in a bull market, and it looked like it peaked out at about $590. It had a very sharp sell-off rally and another extremely sharp sell-off down to the 200-day moving average. The 200-day moving average was still sloping upwards, as you see here, and you can see that the price tested it several times before ultimately failing in middle of April 2022 and entering this stock firmly in a bear market. Spread this out a little bit and take a look and see what's been going on. You can see that this stock began a very nice bear market decline. Nice if you're not long. Nice if you're short, and respected the 20-day moving average all the way down here until early June. What we have now is a fairly typical accumulation of this stock at around, back and forth around the 270 level, 275 level. You can see we had higher bottoms, higher tops, and we're accumulating here. We had this thrust up starting in late July, straight up to the 200-day moving average, and it failed. So even if you don't believe in technical analysis, even if you don't like moving averages, this is a good idea to keep this is why it's a good idea to keep an eye on them, because it can alert you to problems. This stock has respected the moving average, and if you understand how to read these, you can see that it was respecting this moving average. And so it wasn't surprising that we had resistance around the 200-day. Keep in mind, some stocks don't respect moving averages that well. Most do, but clearly this one does respect the moving averages, and it bounced off here. This complete just debacle here today from about 322 to 272, so whatever that is, 50 bucks. That is just a massive decline, but you have to put it in context. What I'm about to say has nothing to do with the quality of the stock or the quality of the company. It's all just a technical discussion. It's all in my opinion. It's all for entertainment purposes only. But you have to be extremely careful when you're in a bear market rally. The stock in and of itself may be, and the company may be fundamentally maybe a great company, but this stock was still in a bear market. And when you see a bounce off the 200-day moving average, and when you see prices here 2 or 3 days earlier, this was the 29th, closing below the 20 and the 5, obviously below the 200-day moving average, and so forth, you have to be very careful, because even though this is a tremendous drop, from a technical perspective, it didn't make a new low. The low down here at 213, we're not even close to that. So from a technical perspective, it's no big deal. It's just if you were long this stock, expecting to get a rally up into this range here, you got crushed today. And so that is a purely technical, in my opinion, way of looking at this, but that's probably the appropriate way to look at it if you want to trade a stock like this when it's still technically in the bear market and you want to get long. So you always want to pay attention to your 200-day moving average, and when you're below it, you're in a bear market, in my opinion. The stock is still in a bear market. It is in a trading range, which we can now comfortably say is around the 314, 312 level, but it is a huge trading range. We're talking about from a low down here of 215 to a high now of 393. That's still a trading range, and as you can see, it got tested today. So I suspect this stock will put in a bottom down here in the low 230s levels. It's my guess. Could be totally wrong. It could sell off, but I'm just giving you my opinion for entertainment purposes only. I think it's probably going to put in a bottom. It may test this low, but I doubt it. This 213 low, but I doubt that. It'll probably put in a little noise down through here for probably mid-September, and then I suspect we'll head back up to the $300 range. That's just a total guess. I could be completely wrong, but I believe that that's probably what's going to happen. Again, you trade at your own risk, and this is just my opinion for entertainment purposes only. But I believe you'll probably hold this bottom that was set in June, or excuse me, that looks like May 26, June of 213, and or you may test it, but I doubt it, and probably around the 230 level test. Or a bottom, some support in there, and then a rally up, as I said earlier, to this area right around here, close to the 300 range. And that's probably by the 3rd week in September if it happens. If I'm wrong and we break this 213, then we're probably going to get some serious selling on this stock. So the takeaways are, this is still in the trading range, even though it looks really ugly. Gaps usually, but not always, get filled, and it doesn't surprise me that this stock is down in this range at this point. It does surprise me that it has this huge gap. Trade at your own risk, but keep in mind we are still in a trading range on this stock, in my opinion. I checked earlier, RBAM Research does not cover this stock. We don't have it in our database, but we do offer 190 stocks every day, algorithmically generated entry prices. We put longs only in these 190 stocks. You can see these were issued today on the 1st of January. They come out every day, Monday through Friday, before 7 a.m. We have 1, 5, and 20-day holding periods on all these stocks that we cover, and those are trading days, worst case. So if you get in this column today, you get out at the end of one trading day or just before. So in today, out tomorrow, in today, out 5 days, in today, out 20 days just before the market close, and that would be out at a loss, and you take your profits as soon as you get them. So if you make a profit on Tesla, if you bought it in this range, assuming your own analysis says it's worth buying, you would take it as soon as you got the profit, even if it was the same day. Worst case, you would close it out at the prescribed holding period 1, 5, and 20. So that's how these work. I will check and see about us adding MDB, MongoDB, to our stocks that we follow. And until we do that, please come by and check them out. They're available for free at rbamresearch.com. We have 190 stocks, as I mentioned. We cover the most liquid futures contracts, and we also cover the major forex pairs and crypto BTC. Everything but stocks are longs and shorts. The stocks are longs only. Again, rbamresearch.com. There's a link in the description below. You just go and sign up. You get them absolutely free, no credit card required, and all updated Monday through Friday by 7 a.m. If you like this video, please click the like button. If you want to subscribe, please do that. If you have a great comment on how we can make these better, please leave it in the comment section below. We'd love to hear from you. Keep in mind, everything you've seen, especially the entry prices, are for entertainment purposes only. All my commentary is for entertainment, and all of it is opinion only. And you definitely trade at your own risk.